Capital gains tax has been with us for over 15 years, so we all know by now what assets may be liable for CGT when we dispose of an asset, and we all know that we only pay capital gains tax on a portion of the profit attributed to the period after 1st of October 2001. However, not everyone is familiar with exactly what happens when a taxpayer incurs a capital loss. In this first example, where the taxpayer made a capital gain profit of 100,000 Rand in the 2021 tax year, we can see the 40,000 Rand annual exclusion granted, leaving a balance of 60,000 Rand. 40% of the 60,000 Rand balance would be added to other normal taxable income subject to normal tax. 40% of 60,000 Rand is 24,000 Rand. So the 24,000 Rand will be added to normal income and taxed together with normal income at normal tax rates. The second example shows what would happen if the taxpayer made a 100,000 Rand capital loss in the 2021 tax year. The Act says that the 40,000 Rand annual exclusion applies to capital losses as well as to capital gains or profits, and this is only fair. This means an allowable capital loss of 60,000 Rand after the annual exclusion. Note that a capital loss may not be offset against other normal taxable income, but may be carried forward to future tax years and offset against any capital gain profits made in future tax years. Looking at the third set of figures in the 2022 tax year, we see 60,000 Rand capital loss brought forward, and we can see that our taxpayer made a capital gain or profit of 240,000 in this third example in the 2022 tax year. How and where can we apply the brought forward capital loss? Well, we first apply the 2022 annual exclusion of 40,000 Rand to our 240,000 Rand gain made in this 2022 tax year before we can apply the brought forward loss. This means the 240,000 Rand gain less the 2022 tax year annual exclusion of 40,000 Rand means our capital gains profit is reduced to 200,000 Rand. We can now reduce the 200,000 Rand by subtracting the 60,000 Rand brought forward loss amount. This leaves us with a gain of 140,000 Rand. In the 2022 tax year, 40% of the balance of 140,000 or 56,000 Rand will be added to normal income to be taxed at normal rates. It is important where in the calculation we subtract the brought forward loss. We cannot subtract the previous year's capital gain loss straight off the 240,000 capital gain we made this year, as the annual exclusion could be different from year to year, and last year's loss has already had an annual exclusion amount applied to it, so that simply would not be fair. SARS says we have to subtract the brought forward capital loss from this year's capital gain profit after we've subtracted this year's annual exclusion from this year's capital gain profit.